Good evening, everyone, and welcome to that time of the month. That's the wonderful time of that month, and I say that time flies so quickly. Today, I have none other than Shan Saeed, our Chief Economist for Juwai IQI. How are you doing, Shan?
Good morning, Yousaf. Thank you. I got up late, so my eyes are red, my hair is junky, and I am still yawning.
You know what, Shan? It doesn't matter. It's 7 a.m. in the morning, and that's the beauty of Juwai IQI. I when I talk to all of our team members, I mean, I know that it's like the time difference is almost like 12 hours of time difference on that. But again, as you know, that this is one of the most exciting episodes, which I look forward doing it because we are looking at the economic outlook with Shan Saeed, and of course, Shan, throughout the month, I keep following up your post on Facebook and LinkedIn. For the people who are not following them up, please follow Shan Saeed on LinkedIn and Facebook, and you can actually see what's happening in the market. And of course, a lot of time, so many stands and so many calls which Shan has done, and he keeps saying that, hey, we coded and we said this was going to happen 3 years ago, 2 years ago, and that's what is happening on that. So before we get to that, Shan, I want to say salam to, of course, Kashif Ansari, our group CEO, who's
My son.
all the way joined from Soil Islam. Kashif, thank you for joining us. Before we get into the questions, I saw that there was a very prestigious event, and I was watching that event as well. That was the Malaysian Housing and Property Summit of 2021. It was really, very good, special insights which you have shared. So, how was it, Chan? Tell us a little bit about that.
It was pretty good. I think most of the speakers they shared. The theme was very simple. That in these challenging times, the only asset class that remains on the investors' radar is land, and the only fixed asset that goes up in these tempestuous time is land. So a lot of interest is there despite COVID, despite economy slowing down, because despite the confidence level is very different. Investors are still parking their funds not only in Malaysia but also in other parts of the world. So I think the main gist of the story is that real estate has become the new global currency, and investors' interest in this asset class is very remains strong.
Absolutely, and then of course your book said the real estate, the new global currency, which you basically published about what 4 years ago, 3 years ago,
2015, almost 6 years back.
2015, 6 years ago, and absolutely you're right. That's the kind of we are seeing here in Canada as well. The property prices are climbing. People are looking into investing into real estate, and of course, one of the reasons that it's the real asset which you can hold on to it on that. So, Sean, let's start also with some of the things. I was going through the latest Economist, which was shared recently, and a few questions came into my mind, and I said I'll ask, who could be the better person to answer than Shan Saeed. The fate of economic recovery seems on hinge, on the answers to a number of big questions, and I'll go with them one by one. So first question is that, will the spread of this Delta variant of coronavirus derail the global recovery? What do you think?
Yes, Yusuf, the global economy remains at the crossroad where uh, probability of recovery is 50% and probability of global economy going back into deep recession is 50. In my opinion, the way things are shaping up, we can expect global economy to remain slow. In the next 3 to 5 years, either you will have zero growth in many economies or you will have slow growth in many economies. The only factor that will keep the investors or the economies on the upsurge is consumer confidence. And consumer confidence comes when people start spending money. And if you look at your GDP equation, consumption contributes significantly to the GDP equation. So once you have consumption, then you have investment, then you have government support, and then the net of exports are on the rise. And people often think that, a recession is a business cycle. That's a myth. Recession is a consumer cycle. When consumers don't spend, businesses don't invest, the economy shrinks. Look at, take the example of Canada. Before we started this, you were sharing that Canada has opened up, government has vaccinated 70% of the population. So once economies open up, obviously the sentiment, the business sentiments on the ground get stronger. Once the business sentiment gets stronger, obviously the business momentum and people start investing in various asset classes, are strong. So I think the momentum has started generating in many economies where vaccination has been over 70%. And this pandemic has really tested the resolve of various countries and organizations how to strike the right balance between you have economics on one side and you have epidemiology on the other side. So how to navigate through these tempestuous time in a strategic way, that's an art. And nobody has got a perfect solution or a manual in front of them that okay, this is the way we are going to handle this pandemic or this COVID. I mean, everybody is trying through various economic and various lockdown strategies how to overcome and how to control this virus. As far as Delta virus is concerned, I was reading report from yesterday's Financial Times. The consumer sentiment in, let's say, we're talking about Germany, is quite shaken because the Delta variant is making an impact. And already in US, they have asked people to mask up again. So I think many economies who are not fully vaccinated will have challenging time facing this Delta virus. So in my opinion, we are heading for another slowdown in 2022. Global economy will not recover before 2023. But the caveat is, if your economy, if those economies are 70% or 60% vaccinated, the consumer confidence will come back and those economies will be on the upsurge.
And how enthusiastic do you think are household and firms about spending?
I think there are two views about it. One, people who are vaccinated, they will continue to spend money. But people who are not vaccinated, they have this fear behind their back that, okay, if I go out, what if I get this virus? So I think, again, this COVID has given a binary variable, and it's like probability has gone into 50-50. Either you do this or you don't do this. So in my opinion, consumer spending will only pick up once vaccination gets stronger. So getting vaccinated is the key. So people who are saying that, it's not required, we can take other medicine, and vaccination cannot help, I think that is wrong. Getting vaccination is the key, and it has been proven in many economies. Look at UK. I mean, the
Yeah.
vaccination is pretty strong and they have opened the economy. The challenge remains, what is the economic cost once you open up the economy? Will we go back to the same situation where, like in US, they are asking people to mask up again because the Delta variant is making a huge impact on the economy and consumer sentiment is down again in July. So, what is the economic cost of all the policy levers that you are undertaking at this point of time? So I think consumer spending will get stronger where people are vaccinated, they are confident, and they are willing to move forward because this COVID will remain for the next for the rest of your life, just like flu. It won't go away. If you can expect that COVID will be under control in 23, I don't think so, because you have to live with it and you have to move on with your life.
No, I absolutely agree with you on this because we have seen here in Canada right now since things started getting opening up over here. We can see that as you said, consumers are actually out right now. Restaurants are open, the parks are open, the cinemas are open. And we can see that people are back. Out in the malls, in the outlets, and they are looking to spend. I think a lot of time. People have been in the house and they've been waiting to come out. In fact, I can see that travel also coming up along as well. We're planning to go to Vancouver next week, and we start seeing that the flights are getting filled up on that. The prices are going up on the travel tickets on that. So I think you're absolutely right. I think the spending is going on that. What about this? Will underlying weakness be revealed as governments unwind the stimulus? I mean, there's so many
Yes,
stimulus packages which have been given in various countries, right?
like at the start, you talked about the Economist magazine. Yes, now the only question that is coming to many investors' mind that people are sitting on cash because of the stimulus and they want to spend money. As you said, people are going back to malls, they are spending money, the hotels, the restaurants, the traveling. The question is, what if once the stimulus packages they stop? What
Yeah.
will happen? Either we can see consumer spending or people won't spend. In my opinion, many jobs will be available after this COVID, and jobs are available. It depends on the individual whether they want to go back into the workplace because they are not confident, or they want to go back to the workplace. So you have to take the risk. So with this stimulus package getting over in many economies, people will be spending money that they're sitting, everybody is sitting on cash. Globally, there are around 5.6 trillion savings that people are sitting
Wow.
right now. So obviously $5.6 trillion, once they go back into the economy, those cash transactions will generate momentum. Once it generates momentum, it will give boost to the economy. Once it gives boost to the economy, it will support the GDP. Once it supports the GDP, it will support the income level. Once it supports the income level, it will bring investors interest to that economy. So as I said, getting vaccinated is the key. And to give confidence to people, the only way forward is you have to encourage people. You protect yourself and you protect others, and the way forward is getting vaccinated. So I think people will spend money. Nobody wants to sit on cash. And as you said, traveling is one of those industries that will pick up. Canada is opening up their borders on 9th of August for all those US travelers who are fully
Yeah.
vaccinated. In the same way, US is opening up their borders on 20th August for all those Canadian travelers who are fully vaccinated. So I think once those advanced economies in North America, they will start up this trend. I think other economies like in Europe or in ASEAN, they will follow the same. So I think getting vaccinated, spending money, yes, it will generate momentum, but the momentum will not be as strong because not many people have even registered, and not many people are willing to take this vaccination, which is quite scary because Delta variant, I read, is going to attack all those people who are not fully vaccinated. So it's quite a challenging time, and people need to be smart enough to understand that this Delta variant is not easy. It's very dangerous. So you have to protect yourself going forward.
Absolutely right. You're right. Vaccination is the key for the economies to start opening up. But again, also, but the answers are unclear. I mean, and four, gauges of recovery is market prices, high frequency, activity indicators, economics forecast. All are giving up some mixed signals to the to forward the recovery guidance. I'm like, what do you say, Shan? Like, I'm perplexed. Right? Like, what do you say? What would you say? There's so much mixed indicator which is coming along on that.
Yes, Yusuf, I agree with you, not 100%, but 200%. There are so many mixed signals that are coming. Like if you see the yield market, the market structure, it was trading at 177, the 10-year US Treasury yield. In March, it was trading at 177. On 19th July, it was trading at less than 1.20. So it was down almost by 30%. Oil prices were down 7% to $69. S&P 500 was down by 1.6%. So I think markets are in a very perplexing situation. Nobody knows what will happen. The markets go down yesterday, markets go up tomorrow. So uh, there is an asset flip. Equities have become bonds, and bonds have become equities, and everybody has become a daytime trader. So you have to analyze the markets in a very microscopic way, how to make your strategy for your asset allocation. And it is not easy. I was talking to someone yesterday and he said, I can give you 20%. I said, boss, are you on drugs or you are going to the wrong doctor?
Yes.
Nobody can give you 20% per month. Even if
Yeah.
you get 1 or 2% in these tempestuous times, that should be, good enough for your health. And in these difficult times, the only strategy that investors can follow is preservation of your wealth. Your principal should not go down. If your principal goes down, it means you're not smart enough to protect your wealth. And you protect your wealth for your future generation, for your children, for your family. So if you can protect your wealth, if you can protect your principal, and if you can make 1 or 2% on your wealth, I think that's good enough. So I think markets are sending mixed signals, as you rightly said. The markets are going up, markets are going down, and to some extent, some people are saying that this market trend will continue for the next 1 year. Yes, it could happen. Premature to say. Will we see a strong bounce back in the economy? I don't think so. As I said, in the next 3 to 5 years, either you will have slow growth or you will have zero growth. Slow growth will happen in those economies where people are fully vaccinated, 70, 80, 90%, where we will see momentum in the economy. But where the confidence is low, government doesn't have money, that's where the problem is. That's where you have zero growth. Like many people are looking at ASEAN or China because that's where the growth is. People have money, the confidence level is coming back. They are saying that Asia will lag behind, other advanced economies will flourish. But again, I think it boils down to consumer sentiments, it boils down to consumer confidence. So, in my opinion, where people are getting vaccinated, like in Malaysia, consumer confidence is coming back. Canada, US, economies will generate momentum, but it will take some time. It won't be as strong as market players and market participants are expecting, but it will be a growth that will generate momentum enough so that businesses can move forward. A lot of businesses have gone bankrupt. COVID has put 3 to 500 million people in poverty, under poverty. So, how to get 3 to 500 million people out of poverty? It will be a huge challenge. Not many people have got 2 times of food. So, how to provide food to those people who have gone into poverty level is a big ask. It is not easy. So, I think the variables that you touched upon, yes. At the same time, I would like to say that economies that are based on commodities like Canada, Australia, Malaysia, where currencies are based on commodities outlook. Next year, the commodities outlook look pretty strong. So that is going to help all those commodity currencies, New Zealand, Australia, Canada, Malaysia, where commodity exports are quite big. So I think commodity-based currencies are going to benefit next year. And even yesterday or day before yesterday, Financial Times ran an article, the economic boom, the commodities boom in Brazil. As you know, Brazil faced tough situation in this COVID landscape, but now they are coming back, and thanks to commodities upsurge, commodity prices are giving boost to Brazilian economy. So I think overall, those economies that are based on commodities export, they will tend to benefit not only this year but also next year as well.
Absolutely amazing analysis. And talking about Australia, we have Lily who has joined us from all the way Australia. Good morning, Lily. Hope you're doing well.
Good morning.
And also, she has a comment. Wow, 20%. That's a loan shark. On your comment on 20%, who wanted to give you 20% on that. And yes, you said it right, Lily. Malaysia, Canada, and Australia. We always see the sun is always shining on Juwai IQI, right? From Malaysia, from Australia to Canada. And also, of course, when you're talking about traveling, it was just strike me, about July 2019, Shan, when we had the Juwai IQI merger. It was a very historic moment, and at that time, yourself, Lily, myself, Omar, and IQI Cambodia, IQI Philippines, we were all there. It was definitely an amazing time which we had, and it was a historic moment of having Juwai IQI merger at that time. And definitely, I'm looking forward to travel. And of course, for people who knows Shan Saeed as an economist, Shan Saeed is a great, great host, and I can say that, and I'm sure Umar can back me up on that. He's a great host when you are in KL. So thank you very much for that. So Shan, moving forward, of course, now what I'm going to do is that I'm going to touch on a few of your articles which I have been seeing, which you have been sharing on Facebook and LinkedIn. Now there was a Bitcoin article which you shared on July 25th on your one of your Facebook posts, and it said that the Bitcoin was trading at 64,000 in April 1421 and now is 34,000 as of July 2321, which is about 50% dropped in value. It moves like pendulum. Of course, I know there's always a Bitcoin question I ask you. The reason is that because since 2017, you have not been a very big fan of Bitcoin. So what was the article again, and what's your stand again on Bitcoin?
Yusuf, as you know, I'm not a big fan of Bitcoin because it's not an asset class. It's just a variable. It is like, you are sitting in a casino and you are taking position in a casino. So I think, in my opinion, Bitcoin will eventually phase out. I could be wrong as well. Many people were saying Bitcoin will touch $1 million or even higher, but I think regulators are not very keen, and investors who have lost money, they have started retreating from this market. So $64,000 on 14th April, and now I just saw the first thing that I see when I get up is tradingeconomics.com. That's my favorite site. So I look at the bond price, the share, the markets, the currency markets. So Bitcoin is now trading at 38,000, so almost down by 45% from all-time high. So, in my opinion, this will eventually phase out, and a lot of investors who made money in Bitcoin, short term, long term, will move into other asset classes, and other asset classes which provide protection to them is obviously, they will go into real estate or gold or stocks or bonds. Historically speaking, these are the asset classes that have remained on the global investors radar, and Bitcoin will only be recognized once you have backing of the regulators. Just like digital
Yeah.
yuan is coming, and that is backed by the central bank. Digital euro is coming, digital dollar is coming. So these variables, when they come into the market, you obviously have the confidence that regulators are there to protect me in case of anything. But with Bitcoin, you don't know the regulators. You don't know who are the market players because the market players are unknown. You can go into the Bitcoin market and you can take position with your pseudo name. You can hide your name. You can say, instead of Shan Saeed, you can say ABC or XYZ
Yeah.
or EFG or whatever. But with digital coin or with digital yuan, you have to place your name. It will be a normal KYC for opening up your account, even with digital yuan. So that gives you protection that, okay, my money is safe because it is backed by the central bank. Bitcoin, I'm not a big fan. So I have shared with many investors that if you want peace of mind, then you should take position in real estate or gold because those are tangible assets.
Absolutely, and right from not from now, since the time the Bitcoin was launched, you've always been saying that always hold on to the asset, something which you can hold on to, whether it is real estate, gold, and silver. One more article which you shared, what was running on high market bets of digital assets. It was about the Binance future contracts. What was this article all about? And I know you made up a couple of comments on it, but I want people to know about that, our viewers.
If you pick up yesterday's Financial Times, they are the biggest crypto derivative player right now. What is crypto derivative? It's just like a perpetual future. We track the price of digital coin. So I think they have slashed their leverage from 125 to 20 because the consumers have complained, the regulators have complained about them. So I think they have come under the radar, and a lot of investors are looking why suddenly the leverage has gone down from 125 to 20. So obviously they want to cut down on the risk, that risk exposure of those investors who are taking long position because the market remains very volatile. and the markets will remain volatile for the next 1 year or so. So I think more shenanigans coming in the market, and investors who want to have sleepless nights, they will have position in Bitcoin. But investors who want peace of mind, they will have real estate, gold, silver, or maybe oil or gas stocks.
Absolutely. So coming back to my favorite last two questions to you is always the oil. You just mentioned about the oil. What's the oil outlook looking?
Oil outlook at the start of the year yesterday when I was speaking at Malaysian housing market, I said I love internet because internet gives you the credibility, or you lose your credibility in 2 seconds.
Yeah.
So 8th January, I shared an interview with the Star newspaper in Malaysia, and I said oil prices will be trading between 50 and $70 per barrel. By 8th March, oil was already trading at $70. So for this year, we have already hit the target. So for July till December, H2, we have revised our forecast, and we are now saying that oil prices will meander around 73 to $87 per barrel. The premise is based on that economies are opening up. Once the economies open up, the demand for oil will go up. Once the demand will go up, you will have bottlenecks in the supply structure. So we expect oil prices to remain in this range. Many people are saying oil prices will hit $100 per barrel. Premature to say, but
Yeah.
possibilities there. Once again, it boils down to how soon global economy or people get vaccinated. So vaccination is the key, but we still maintain our stance for this year. Next year, we expect oil prices to stay above $80 because we expect geopolitical risk, the US dollar depreciating, and obviously the demand going higher because economies are opening up and lockdown getting slower in many parts of the world.
You're absolutely right. I think it all depends upon the vaccination, which you've been saying right from the starting. As soon as the people are getting vaccinated, and the countries are opening up, the economies are opening up, that will make a big difference as well. Recently, like 2 weeks ago, the Bank of Canada, the interest rate outlook on that. Bank of Canada kept the interest rate same. Now there was a couple of reports which I was going through, the U.S. and the Canada reports. Now in the Canada side, they said, they could be looking at opening up, increasing up the interest rate maybe 2022, but Feds are talking about 2023. Again, what's your outlook on the interest rate, and when can we expect this interest rates to go up?
Yusuf, yes, very important. Everybody is looking to Fed. You have big four. When we talk about big four, you have US, you have European Union, you have Japan, and you have Bank of England. So the whole world is looking at Bank of England, Central Bank of Japan, ECB, European Central Bank, and Fed. The way I see things in the last 1 week or so, Fed is not willing to increase interest rate before 23. So it
Okay.
means if Fed doesn't increase interest rate before 23, other central banks will follow suit. The reason is they expect inflation to slow down. So when inflation slows down, it is called disinflation. What is disinflation? That inflation is moving ahead, but in a very slow manner. So inflation sentiments remain subdued on the premise that consumer spending will slow down. If consumer spending slow down, obviously the prices will come down. If prices will come down, obviously you won't have inflation. You have either disinflation or deflation. Once you have deflation, that is more precarious, that is more dangerous as compared to inflation, because deflation means the consumer's confidence and consumer sentiments are so low that they are not willing to spend money because they are fearful of the future. But I think since December 2008, Fed has printed so much of money. And in the last 1 year, the balance sheet has almost touched $8 trillion now. That expect inflation phase will remain strong. In November, in our newsletter, Juwai IQI newsletter, we say that stagflation is hitting the US market. What is stagflation? Where you have higher inflation, lower growth, and higher unemployment. I think I'm not the only one. Mohammad Al-Arian, the ex-PIMCO chief, who is now advising Allianz, Zero Edge, Stanley Druckenmiller, everybody is now talking that stagflation is going to hit the US economy. So I think inflation concerns that inflation will go down. I don't think so. Inflation will remain high. Look at gas prices in US, 40% increase June to June, 28% increase this year alone, YTD. So I think oil and gas, once the prices will go up, they will bring inflation back. And once inflation comes back, obviously the interest rates will go up. Interest rates will go up not in 22, maybe in 2023, but inflation gets out of control in 22, then Fed is going to panic. Fed is going to panic. They will increase interest rate. That will create ripple and financial bazooka in the equity and bond market. And many investors will lose their funds in equity and bond market because they are not really hedged themselves against the currency risk. Once you don't hedge yourself against the currency risk, obviously your asset portfolio takes the hit. So I think, in my opinion, 2023 is the target for Fed to increase interest rate. Bank of Canada will monitor the situation. If inflation remains under control, they will follow the Fed's policy.
Absolutely. One thing I can tell you, Shan, with the lower interest rates, the real estate market in Canada, and specifically if I talk about the GTA, which is the Greater Toronto area, it's gone up like big time. So you can see that the prices have gone up by by 20%, 22%, and right now also we can see multiple offers going on the houses. And we're talking about the 1.4, 1.5 million houses. Anything where it's semi-detached prices have gone over a 1 point. They've already crossed $1 million. The townhouses have gone over $850,000. The condo market, where people right before the start of pandemic said, now people will not be going to condos and people will be moving out. And all of a sudden, I can see for last, 4 or 5 months, we're seeing the condo prices going up. There's multiple offers coming on that. And I think if interest rate continues to be lower, definitely, people can are looking to invest into real estate, whether it is first time home buyer or an investor. But as you could get a house, for in under 2%, and you get a car for, if you want to finance a car, it's over 4%, 5%. So why not buy a house on that?
Yes, yes. And I still remember, I think 2 months back, you were citing from Economist magazine, the minimum price in Canada or Toronto that you mentioned is
Yeah,
1 million Canadian dollar. You
yeah,
cannot get anything below $1 million. And as you said, there were multiple offers. And I'm talking about 2 months back. And
yeah.
still you are saying there are multiple offers because the market is so hot. So this is a good time because the interest rates are low and you can lock in your mortgage rate at a lower interest rate and you tend to benefit in the long run.
Absolutely. And one of my clients, he had a renewal come up and he called me. He said, should I renew? I said, what rate are you getting? He said, the banks offered me 1.20. I said, do it. Lock it right now, 1.20. It's an amazing interest rate.
Yes. HSBC was last time you shared was offering at 0.99.
That's right, 0.99. So I mean, I think this interest rate, till it's not going up, even if there's no new regulations which has come up, but I think still with the real estate market in Canada, we will see the growth going on because there's still shortage in terms of our housing, and there's still a huge demand on that. So Shan, I hate to say this, but it's always like we start up and then there's so many things still there. Anything you want to say before we say bye to our audience?
Thank you so much. Always a pleasure talking to you early in the morning. And it's good that you are leading from the front and you have worked very, very hard in building your team. And this shows your strength and your caliber and your character, how you have led the team, how you have motivated your team, that IQI Canada is making a strong credibility and integrity in the market. I have come across 2, 3 people in Pakistan who will say that we have heard of IQI Canada and they are doing some good work. So all credit goes to you and to your team who are doing fabulous work. Keep up the good work. And I say good morning to everyone from Kuala Lumpur, Malaysia.
Thank you very much, Shan. It says that dream work, teamwork makes the dream work. So that's what is happening with us. Our team is really, really wonderful. With this note, thank you so much, Shan. We had a great conversation. And till next time, definitely we'll be back with some more questions. Till that time, please take care of yourself, stay safe, and take care of yourself. Bye bye, everyone.
Bye
Bye.
bye.